Welcome to today's webinar. Is an S Corp right for your trucking company? Today's webinar is brought to you by Ascend TMS, the world's #1 TMS software. Manage every aspect of your logistics and distribution operations with the same transportation management system technology used by the world's largest companies. Ascend TMS gives your entire team complete control over your daily freight movements. Begin using Ascend TMS in 12 seconds from now and start booking loads in 60. There's no need to schedule a demo. Ascend TMS is the easiest to use TMS software on the planet. And if you need it, unlimited training is totally free forever. Your team will simply love the experience. A little about us. We are the first payroll provider in the US to be solely focused on trucking companies. And our core mission is to help trucking families, which includes the company owners, the drivers, and the office. We are a full service payroll solution. We are not a software rental. Each client is provided with a dedicated account manager to handle the payroll week to week, fully customizable reporting and pay stubs, and so much more. A little bit about Mike. He has over 20 years of experience in the trucking industry. Mike was the CFO of a trucking company with 80 trucks and a thriving brokerage. This experience gave him the perspective that a payroll solution has to make the lives of the office people better. The solution he has designed are to benefit everyone.
All right, thank you, Harley. Today we're going to talk about S Corps. There's a lot of bullets to cover here, but none of them are terribly long. But I kind of wanted to walk through the discussion right in the beginning, right there, and just tell you what we're going to talk about. We've been getting a lot of questions lately about S corporations and what it means, and people call with 20% of the information. I heard I can save money. Tell me how to do it. All right. So after we get a couple or three of those calls, because our mission is to help trucking families, we got to share this with everybody. So these are the things we're going to talk about. You know, what an S Corp is, how it's not the same as an LLC, how it saves you money and some other things that are good for you. How can we achieve this? What are you going to have to do once you do it? And are there any bad things that could happen, right? Like, not everything is perfect. If this was an automatic for everybody, then everyone would have already done it. So when the Q&A, of course, like we always do, and we've got an announcement at the end that we're excited to share with you. And as Harley said, anytime you've got questions, put them in that questions box. Even if it seems unrelated to this webinar, our mission is to help trucking families. If we can help you, if we got an answer, we're going to share it with you. And sometimes those are the most fun questions anyway. I do know that we've got some of the people that signed up for the webinar are decent sized trucking companies. And so this might be a great resource to share with your owner operators that are thinking about their tax planning and things like that. So we're glad you're all here and we're excited to share this with you. Here's a little generic disclaimer. This is general advice. I don't know all of your individual situations. I don't know even what city you're all in or what the local laws are for every possible outcome of city and state. So check with your tax advisor about these things. If you need a tax advisor, we know some people that specialize in trucking. Check with your attorney. If you need an attorney, we know some of those too, and I think we've even got one in the audience today. That's an attorney. You know, check with your attorney. They're going to know your specific situation better than I will. So I'm speaking generally, of course. Run this by your favorite tax professional or attorney. So let's start with what is an S corporation? Well, it goes back to all the laws from years gone by. It's really a subchapter S corporation, and it's a tax designation. A regular corporation would be called a C corporation, which would be subchapter C. Again, go read that stuff if you can't sleep at night. It'll put you right out. But a subchapter S has some different features than a C, and we'll talk about those a little bit later. But one of the important things to know is that an LLC can be an S Corp and still be an LLC. An LLC is a designation on an entity. So an LLC, you can be a sole proprietor and be an LLC. You can be a partnership and be an LLC. You can even be a corporation and be an LLC. And if you stop there, your tax stuff never changes. So if you're a sole proprietor and you're an LLC, you still file a Schedule C on your individual tax return, just before, even whether you're an LLC or if you are not. If you're a partnership, you file a Form 1065 every year, whether you're an LLC or not. And if you're a corporation, you file an 1120 every year, whether or not you're an LLC. So what an S Corp does is it changes the tax part of this thing. So for an S corporation, instead of those forms I just listed, the Schedule C or the 1065 or the 1120, you would file what's called an 1120-S tax return every year. And that's really the difference. It's really a tax thing. It's not about the limited liability or any of that kind of stuff, because you'd have that by whatever LLC or corporation you already formed. If you're a sole proprietor and you want to be taxed like an S Corp, I guess you could do that, but please form an LLC first. Again, talk to your attorney, or if there's one that's listening and wants to offer advice, that'd be great. But you want to limit your liability. But the S Corp really isn't going to do it on its own unless you form a corporation, then convert it to an S Corp, or you form an LLC and convert it to an S Corp. Again, talk to your attorney about that. So, yeah, an LLC, the LLC, you're still an LLC. The nice thing is, if you're an LLC now, if you're Bob's Trucking LLC and you choose to become an S corporation, you're not going to have to go through and get your authority changed to Bob's Trucking Inc. or anything like that. You're still Bob's Trucking LLC. So it's just tax stuff you got to deal with. Now here's where it gets more fun, because the whole point of this is to pay less tax. Tax evasion is illegal. We don't ever support that. Tax avoidance is very much legal. So that's what we want to do. We want you to pay as little tax as possible, legally, of course. We don't mess around with any of the other shenanigans. So here's an example. I made up these numbers. I know that profit for especially a small trucking company with 1 or 2 trucks varies wildly from year to year. But I took what I hoped would be an average. You should be making a little bit more than you would be if you were a company driver. If you're in this for yourself anyway, because you've got the risk, you should get the reward. But I made an example of $75,000 before you paid yourself a wage. But that's like your tax bill. So your equipment depreciation and all that stuff comes out 75 grand in taxable income before all the standard deductions and stuff like that. And we're going to make your S Corp wage. You have to pay yourself a wage, which we're going to talk about. We're going to make it 35 grand. Has to be reasonable. Reasonable has a pretty broad brush. So in that example, you've got the non-S Corp. This is somebody who hasn't become an S Corp yet. I'm going to get my drawing tools here. They pay 15.3% of the profit of the whole 75 grand. This is just self-employment tax, 11,475. It's a lot of money. That is the equivalent, for those of you who have been W-2 employees before, that's FICA. Social Security and Medicare, the employer and the employee half. When you worked for somebody else and were paid W-2, the employer paid half. Now you get the full thing. Congratulations. If you pay yourself as an S Corp, you only pay the self-employment tax on the wages, not on all of the profit. So instead of paying $11,475 just in self-employment tax, you're only going to pay $5,355 in self-employment tax. So it's just math now. You save over $6,000. That's reduced self-employment tax, reduced Social Security and Medicare that you're paying in the 1 year. It's a lot of money. It takes me a long time to earn $6,000 put in my pocket. I'm sure it does for all of you too. Even with rates being a little decent, they're not what they were. So, and diesel's going up. So $6,000 do you a lot of good. Now, one thing I want to point out, the federal income tax doesn't change. So everybody's number is going to vary, but they're going to be the same. The point is I put lots and still lots in there, but the difference is 0. And that's what matters. Your state, there are some states that tax things a little differently. Consult your local tax advisor, or we can recommend one for you. But generally speaking, I think you're going to come out okay on that. The big thing is the $6,000. This is the winner right here. I'm going to color that all up. That is the winner. $6,000 in this example. And the bigger gap between your wage and what your profit would be before wage, the bigger this number gets. But yeah, $6 grand, right? It's a lot of dough. Yeah, this is the winning slide of the whole thing. I'm just going to spoil the rest of this for you right now. This is the one that wins it. And we're going to send this all to you. Other S corporation advantages. Looks like I have to erase all drawings. It's easier to get credit because you'll have a W-2 from, if you're Bob's Trucking LLC. I don't know if I have a Bob listening right now, or watching. If you're Bob's Trucking LLC, you'll get the W-2 from Bob's Trucking LLC to Bob. And when you go to buy a house or a car or something like that and you need credit, it's easier to get underwritten when it's a W-2. It's stupid. There's no other word for it. It's dumb. It shouldn't matter, but it does. And they go, oh, they're W-2, they must work for a stable company, versus you being self-employed and they're all concerned about risk, like we're going to stop trucking or something. I mean, it doesn't make any sense to me, but the fact is it helps you. So they'll look at it and go, oh, well, okay, you make this much money. Well, that's good. There's also a lower audit scope. Audit scope is how much they can audit. That's what the scope of the audit would be. And so if you have an 1120S and that gets audited, it generally won't flow into your 1040, which is your personal return. It can. So again, I'm speaking generally, it can do that, but it often doesn't. Or if they audit your personal return, they might not get into your business. If you're a Schedule C because you're a single member LLC, then it's all the same return and they can go right into it. They can be auditing you because they want to check your charitable contributions or something like that you had on Schedule A. And they're like, oh, since we're auditing you, we want to see all your receipts for fuel, because that number looks really high because the auditor doesn't understand anything about trucking and doesn't understand that you bought 20,000, 25,000 gallons of diesel. So then you got to go and defend all that. And hopefully none of you are doing anything wrong where that would be a problem. At the same time, it's a lot of time of yours and expense for whoever you have help you with the audit that we don't need that in your life. So the lower audit scope can be beneficial. And oh yeah, the tax savings, that's really the biggest and best one. That $6,000 we were talking about on that last slide, right? Like, man, it's one of those things where we all hear about businesses and tax savings and things like that and think it's for the big guys or something, but it can be for you. So yeah, $6,000, $6,120 in the example. So now how do we do this? So we decided we want to make our LLC into an S Corp. Like, yeah, we want to do this, right? It's $6,000, I'm all in, sure, free money. Okay. All you got to do, there's two forms you got to fill out. 8832 and a 2553. If you're already incorporated, then you just need the 2553. But the forms aren't terribly complicated. We help our payroll clients with them. If you're not a payroll client and they're never going to be, we can refer you to somebody else that will do it for you, or you can do it yourself. You can even elect in certain situations in the middle of the year for the prior year, as long as everything you filed has been consistent with that corporation. And since there's really nothing you would have filed, you're probably going to be okay. But yeah, these are a couple of forms. Send them into the IRS. Boom. You're an S corporation, and you can start saving that money. That's good. So what am I going to have to do, or what do I, as an S corporation? What are some of the rules? Well, to be an S corporation, there are certain sets of rules you have to follow. Most of them are not going to affect you. You need to have a single class of stockholders. You can't have Class A and Class B stock. You can't have common stock and preferred stock. Can't have anything like that. It's all got to be the single set of stockholders. It doesn't mean you all have to own the same amount of stock, like you all have to be equal partners if you have more than one partner in it. But you can only have one class of stock. Again, to get into multiple classes of stock, you're into a pretty sophisticated setup already. So I don't think it's going to affect anybody, but we got to disclose it. You need less than 100 total stockholders. Again, I don't think that's going to affect any of us, but it's one of their rules. And so I wanted to share it with you. If you've got 200 of you that got together to buy the one truck, well, then you can't do this. But again, I think that's unlikely. So the last one is the one we're going to talk about, really, is you've got to pay yourself a reasonable W-2 wage, and you've got to do it W-2. It can't just be draws. You've got to take taxes out. You've got to do all the stuff that you do for a payroll as if you're paying somebody else W-2. Fortunately, that's kind of our day job. So if you need help with that, we'll talk to you about it all day, and we don't need to really do it here. But one of the strategies could be if you're the only owner and you want to do this, but you want to keep your costs down because, right, that's why we're while watching this is to put more money in our pocket. You could pay yourself once a month. You don't have to pay yourself every week. You know, we were talking 35 grand a year. That's just under $3,000 a month. And you could just do it once a month. It'll make it cheaper for you. It's your money. So there's lots of ways that we can do that. It's certainly doable, and it's not going to cost you the 6 grand you saved. Believe me, it's not going to cost you nearly that. So you're still going to come out way ahead, but you do have to do it. If the IRS has been investigating a little bit more, well, they've been investigating everything because they've been stepping up their enforcement for a lot of reasons. But one of the things they're starting to look at now is S Corps that don't pay a reasonable wage. You can't pay yourself $1 a year. We've probably all heard stories of years gone by of the owner getting paid $1 a year, but you got to pay yourself a reasonable wage. I think you can make the argument that 35 grand is reasonable. If you want to make yours 40 or 45, it's whatever you want. It's up to you. Just don't make it 10 grand a year for a full-time job because we all know that that's not realistic, and it's not worth the pain of dealing with the IRS on this stuff. Pay yourself a reasonable wage. Okay. Now we've got a few downsides here. Bad things that could happen. I call them bad things. There are some bad things and there's just some extra things you've got to do. So what could happen? Well, what if your company loses money that year? We all know trucking is not the most stable of professions for income. 2021 should have been fantastic for you. Rates were up. That should have been the year you made money. 2022 is a little bit more of a mixed bag because diesel's gotten crazy expensive. Now it's just really, really, really expensive instead of for really's inexpensive. So, this year may not be as profitable. In addition, the way that depreciation works on a truck, may show you having less profit. And so if you lose money, for example, we'd use that example of making 75 grand and paying yourself a wage of 35, leaving 40 in profit. Well, what if before paying yourself, you only made 25 grand that year because of depreciation or because of you just had a crummy year or your motor blew up or whatever, which hopefully none of that happens to you, but it happens to some people sometimes. Well, you're going to show a $10,000 loss on your corporate return because you paid yourself a wage of 35,000. You're still going to pay self-employment tax on the whole 35. You're not going to get a rebate on that 10 grand of self-employment tax. So that's going to stink. It shouldn't happen often. If it's happening often, you need to sell your truck and go drive for somebody. And I'm sure there's a number of people in the listening audience today that would be happy to hire you. But you should be making more money as an owner operator, as a small fleet, than you do driving for somebody else. That's the idea. That's the goal. So, but occasionally it's not going to work out that way. The other downside of it, the next downside of it is that this tax savings that you're getting, the $6,000 in the example, that is it's going to change the calculation of your Social Security. Social Security payouts are based on how much you pay in through your working career. There's a whole formula for that. I'm sure someone on Google has it for you. And this is going to lower it, quite honestly, because it's the Social Security tax and Medicare that you're saving on. It's not income tax. So your Social Security will be a little less. I think we could all agree that Social Security as an investment vehicle is not the best return for a lot of reasons. And I'm not trying to get into the politics or history of Social Security, but we're not making money on this. So if that's your concern, take that 6 grand, put it into your IRA or put it into your investment account, and start saving that way. You're going to come out better off on the end. It's something to be aware of, but it's not something to stop you from doing it. And I don't like surprising people, so I list things like that here. There's a third one I didn't list. You're going to pay some payroll taxes on yourself, and you're probably not ever going to be able to collect on them. You're going to have to pay unemployment on yourself. and you're not going to be able to collect on it. It's going to be about $400 a year. It varies by state. So again, check with your locals, or if you're in a particular state and you want to know, I won't be able to give you an answer right off the top of my head in the question box, but if you can still put it in there, and I can research it and email you about it. But generally speaking, you're looking at about $400 a year there. You're looking, I just want to give you some of the costs that are going to offset against that 6,000. There's going to be the cost of that. There's going to be the cost of getting a payroll done, because you got to have somebody do it. I'll tell you, we're about $55 a month for a once a month payroll, all in. It's not that much, so that's $660 a year. And then you got about $400 in payroll taxes, so you're around 1,000. You're gonna have to file 1120S, which might cost you an extra $100 or so getting your taxes done, depending on your tax person. Again, talk to them about it, and they'll tell you exactly how much more that it's going to cost you. And so be aware of it. Again, you're still going to come out $5,000 ahead, but there are going to be some expenses. And much like many of you, I don't like surprises, so I want to share them with you now. We're going to go to questions in a minute, but first we have an announcement. We are doing the first ever summit, and you're all invited, and it's free. If you're anywhere near Grand Rapids, Michigan, that's where we're based. We're going to do a half-day summit on November 1st, which I should have put on the slide clearly. 8 a.m. until 1 p.m. We're bringing in experts from many different disciplines, all of whom serve trucking companies. And they're going to give you advice for free. The whole thing is around making you more financially successful. It's called Profits 2022. Profit stands for Professional Recommendations on Financial Improvement in Trucking Summit 2022, right? The speakers are going to be, there's going to be Tim from Ascend, who sponsored the webinar today. A number of you have probably talked to Tim. He's a great guy. He's been in the business for a while. He's going to have some great insight, I'm sure. There's going to be Mike Tausier from Scopolitis and a lot of other names. They're one of the biggest trucking law firms in the country. If they're not the biggest, I don't know how you qualify who's the biggest in trucking and whatever, but they're one of the players. And he's going to come talk. There's going to be Mike hosted from ATBS, and they do tax and bookkeeping for small trucking companies. By the way, if you have a question about your particular S Corp in the state, they're the people you can talk to over at atbs.com. Jeremy Raymer from Driver Reach is going to come in and talk about recruiting and retaining drivers. They're from Indianapolis. They're a big, they help companies recruit drivers more effectively. And then I'm going to talk about some payroll things. And at the end of it, you're going to have the chance to ask the expert. You can ask any question of any of us. And each of your questions are going to be an entry for a prize to be determined. But usually like it's sports tickets or something fun, or golf, or nice bottle of wine or something. So we're excited to announce it. We've got the link on here. That's the working link, but we're migrating it over to profits2022.net, but it might not be there yet when you go look at it. So go to that link. I'm going to email this to everybody. Go sign up for the conference. You can do it virtually or in person. We're looking forward to it. It's so consistent with our mission and these other people that are speaking. It may not be their written down mission, but they just want to be helpful. They want to provide you with advice. They like to see trucking companies succeed. They think we're all better when we're all better, right? So they're happily, contributing their time. We're putting the whole thing together, and we're excited about it. It's nice to put faces with names with any of you guys who can get to Grand Rapids. This is the first one that we're doing. We're going to try and do this every year. But yeah, so excited about it. To be able to get these people together is such a win for us and a win for you to get these guys together, because we're covering almost all the bases on this, and we're excited to do it. We're happy to do it. So with that, if there's any questions, put them in the question box. I'll give you another minute to get that done. While I'm doing that, all of our contact information is right on this slide. If you've got questions about this, you think of them later, or you show this webinar to somebody else and they've got questions, reach out. Our mission is to help trucking families. It's not just to sell you payroll. That's just our way of helping trucking families and keeping the lights on. But we want to help. There's a lot of great small trucking companies with 1 and 2 and 3 or 50 or 60 or 70 trucks or 500 trucks or whatever that we're able to help them. We're so excited to do it. We've got links down at the bottom there. The truckingpayroll.com/blog that's not in red. We put articles up, usually about 3 articles a week, different questions we get from people, which is part of why I want all your questions too, is so that we can turn those into articles, because we want to share what we know, what we've learned with everybody. Trucking's hard enough with all the compliance with the DOT and all that kind of stuff. We want to help you make sure you're making money, being profitable about it. So one of the questions we always get is, are you sending out the slides? Yes, we are. We're going to send you the slideshow. We're going to email it to you as a PDF so you can look at it later. We're happy to do that. We're also going to put a recording of this webinar on our YouTube page, which is listed on this slide. We put all our webinars there. If you go to truckingpayroll.com/webinar archive, which I know is a bit to type, but you can go to truckingpayroll.com and just go find it. I think it's under trucking education or something like that. All our webinars are there. We don't put them behind a registration wall or a paywall or anything like that. You can just go watch them, and we hope that you do, because we want them to be helpful. We want them to be good for everybody. One of the questions I got before the webinar was, can I start in the middle of the year with this? Like, today's August 9. Can I do it for 2022? Because I made some money, which awesome, good for you. I'm happy you guys are making money. You should make money. You work hard. Yeah, you can. You have to fill out the form a little bit differently. That 2553 that I showed you in the other form, the other tax form, you got to write a couple extra things on there, but you can do it, and you can start paying now. My advice to you would be to start paying yourself now, because you're going to need to put a decent annual salary up. So in your case, instead of paying 35 grand over 12 months, you're going to want to pay 35 grand to yourself over the last 5 months, so 7 grand a month. One of the things you can do too as a tip, because you may not feel like you can give yourself 35 grand over the year, is we can just do the payroll as if you've already paid yourself, like in advance. So we don't need to pull the whole 7 grand a month out of your account and then send you direct deposit for the 5 grand after tax or whatever your situation would bring it out to be. We can just do the 2,000 to pay your taxes for you, and make sure everything gets filed on time. And that's really the big thing, is you want to make sure everything's filed right and it's filed on time. And so that's really what you pay your payroll service for, is to do that kind of stuff for you. And the nice thing too is if you ever hire another driver, you've already got payroll set up, which is kind of a nice little plus on the other side of it. I don't see any other questions. Sometimes people think of questions later. It's totally cool. Hit us up. We're going to send you these slides. Got a question? We'd love to hear it, because we want to make sure that we're making these as good as we can. We're going to do another webinar next month on a topic to be determined. We'll announce that in a couple of weeks. We'll have another big announcement at that point, hopefully, as well. We're working on something big with one of our technology partners that could really impact the trucking audience. So we're excited about that. So thank you for attending today, or if you're watching this on a recording, thanks for watching. We'd love any feedback you've got, and we hope that you have a great rest of your day.